Very warm welcome to this introductory session to shareholder activism and investor engagement. I'll do a quick round of introductions and start with a really brief overview of the investment chain. We'll talk about AGM activism as a tool in shareholder activism. Lisa will talk about investor engagement, and Juliet will cover filing shareholder resolutions, and we'll have time for questions and answers, and we're definitely keen for people to share their own experiences, as obviously there's lots of rich experience in on this webinar represented, and also in different countries, so please do chip in. Yeah, just one more note, there's likely to be varying degrees of knowledge in this field, so please bear with us if some bits might be a bit basic to you, but we try to make it useful to different levels of experience. You can write questions into the chat box during the session, or as I said, you can ask them at the end, and then you need to make sure to unmute your microphone. We are recording the session and we'll make it available online afterwards. We're happy, happy to share the slides with all participants. Just to introduce myself really briefly, I'm Federica Hanisch. I am European Network Manager at ShareAction, and ShareAction is a charity that promotes responsible investment. So we try to make the investment system a lot more transparent, a lot more accountable, and deliver for social and environmental good. This is delivered as part of the European Responsible Investment Network, which is a network of organisations that are keen on campaigning on matters such as sustainable investment, but their pension funds, but also interested in exactly what we're covering today, using shareholder activism in their campaigns. So if that's of interest to you at all, do come and speak to me. But yeah, over to Lisa and Juliet to quickly introduce themselves.
Hello, my name's Juliet Phillips. I'm Campaigns Manager at ShareAction. I look after a lot of our climate change related corporate facing campaigns, and a lot of my work is focused on BP and Shell, the oil companies. I also do a bit of work on factory farming. I've worked on tax issues, corporate lobbying, and varied other amounts of campaigns as well. So quite a broad range of topics.
And I'm Lisa Nathan. I'm also Campaigns Manager at ShareAction, and so my focus has been on getting investors to push companies on how they treat their workers. And so that's been my major focus, but like Juliet, a bit of dabbling into other spaces, but I'll speak to mostly how you get investors to talk to companies.
Excellent. Okay, so let's kick off with the brief overview, probably oversimplified overview of the investor chain, and it's a bit unfortunate you can't see the slides now because there is quite a handy graph from Aviva, which is their toolkit on sustainable finance, which does showcase quite well what happens to people's money when they put it into long-term savings or investments. So we do recommend checking it out. I'll kind of skip that now and talk about those investors, those actors in the investment chain that ShareAction does focus on mostly, which are asset owners and asset managers. So asset owners, I apologise to those who know, there are obviously pension funds, insurance companies, sovereign wealth funds, foundations, university endowments, also called institutional investors, and it's often in the case of pension funds and insurance companies, it's ordinary people who keep their savings with these investors through pension savings, insurance products, etc. Because of that, asset owners have fiduciary duties to their beneficiaries, which means that they have to act loyally and prudently, so they should act in good faith in the interest of their beneficiaries, not in their own interest or in the interest of other third parties. They should avoid conflicts of interest and also act with due care, skills, and diligence. Why I'm mentioning this is that it's just important to understand their motivations and incentives. So they have got those legal obligations. It's the asset owners that set the investment mandate, which informs the investment strategy. They're the ones to go to if you want to influence the asset allocation, how much they want to invest into shares, where, into how much into infrastructure, bonds, other asset classes, and they choose their asset managers and engagement strategies. And it's worth highlighting they don't have, they often don't have much capacity to engage with the companies themselves where they're invested, so they outsource this to asset managers. At least here in some countries, particularly when you have got large asset owners like in the Netherlands or in Denmark, they do that in-house as well. Anyway, to the asset managers, they pool the assets, they're quite powerful institutions. Biggest known names are BlackRock, Vanguard, JP Morgan, Allianz is the biggest one in Europe, and they manage the assets of the asset owners, as the name says. So they have dedicated resources and capacities to do engagement with companies and the right to vote at annual general meetings of companies. In terms of their motivation, they do want to win new clients and keep their clients. So it's important to keep in mind that responsible investment and sustainable investment is a growing field, so they need to keep up with these topics in order to satisfy emerging client demands. There are obviously a range of other consultants and research providers that I have got an overview slide in my presentation. I didn't mean to go into much detail. These are obviously also important actors. ShareAction doesn't focus so much on them, simply as a matter of constrained resources, but that's not to say that it's not worth engaging with these, particularly if you want to think about who the asset owners are listening to. That doesn't apply so much to custodian banks, as they are primarily administrating stocks and bonds, so they don't own them. So not particularly good target in that regard. There are obviously investment consultants like Mercer who assist asset owners with making their long-term investment planning. There are custodian banks, as I said, they primarily administer corporate actions. They don't really own any assets. We've got stock exchanges that primarily enable transactions, proxy firms that do the administration of ownership activity, index providers, ESG data providers. We've got some basic explanations of those on the slides, which I'll share. Anyway, moving on to AGM activism, which is a bit more exciting. So AGM activism, what is it? Basically, it's activism where you purchase a share of a publicly traded company, not to make money, but to be able to attend the company AGM. AGM means annual general meeting. It's not used as such in Europe. But yeah, in the UK, AGM. And it allows you to ask a question, and you can raise an issue directly with the board of the company, and all that with just one share, and often you can take a guest as well. You can normally get those from retail stockbrokers, but there's also lots of other organisations around, speaking of Europe, that specialise in this kind of campaign tactic and may be willing to lend shares to you. So we're compiling some information on this and who's holding shares where, what the rules are about AGM attendance, and we'll be sharing that through the ERIN network that I've mentioned. AGM activism, why do we think it's a good tactic? It's obviously a really great way, a powerful way to get to the fore of company directors and develop relationships with those that you're trying to influence. So you can directly talk to them, which isn't always an easy thing to achieve, particularly if they are not very open for dialogue with NGOs. We find that if you have a specific ask, for example, once you've raised your issue, to ask whether they commit to a follow-up meeting or to make certain information available, this tactic works quite well. They do not tend to say no because they don't want to look too bad in front of their investors. And I think, getting the mood of the investors, or getting investors behind you who are in the room, is quite an important thing. That's why we always try to phrase questions in a way that helps to get investors' interest. So we argue in an investor's perspective why it's risky or a great opportunity to do X, Y, that. And Lisa might touch a little bit more on this, how to frame issues for investors. By raising investor interest, that can obviously lead to really good new contacts with other investors, if not with the directors themselves. That's obviously a valuable thing to develop. If there's a break or a lunch, which isn't the case at our AGMs, it's a good time to foster these relationships and get chatting, obviously. A few other tips that we've picked up on the way to get your points across and get the mood behind you. To be polite but firm, that's according to your own judgment. We try to dress smart in order to sort of look a little bit like them. Keep our questions short and always make specific ask, as I've mentioned. And we'd recommend holding onto the mic, UK AGMs, after you've asked questions, if you have got a quick follow-up question, but we wouldn't necessarily encourage you to engage in a long back and forth conversation, just for the same reason of not losing the mood. Using their own language, I think, helps, so do familiarise yourself with the annual reports, etc. Obviously, you can also use AGM activism for other purposes, such as getting media coverage, building your public brand. It's really great for getting lots of buzz on social media. And for us, it's an excellent way of engaging our supporters in our campaigns and building their interest in the work that we do. So we do train them and help them phrase powerful questions, and I think it's quite an exciting thing for people to do, particularly in today's common feeling of lack of ownership and feeling quite far removed from decision making. I think this is quite a good thing to do. One particularly good example of where ShareAction has used AGM activism successfully over the years is the living wage campaign. So the living wage in the UK is a voluntary scheme that encourages companies to pay their employees a salary that is high enough to live off. It's independently calculated, so it's actually enough to support family, for example. And so we've been starting to ask AGM questions on this topic, whether companies would commit to credit as living wage employers since 2011, and back then it was only a couple or 3 companies that did it, and by now we've achieved 30, which is hugely down to Lisa's amazing work. But it is obviously it was not just the questions. AGM activism is a complementary tactic. I think that's an important point. So it's most powerful when it's used as a tactic, part of the bigger campaign. So getting investors, for example, to write to the company before the AGM, or even get them to raise the issue in private engagement meetings, would obviously help you have a much bigger impact. Anyway, over to Lisa to talk a bit about investor engagement.
Yeah, jumping off that, really, I'll talk a bit about kind of this side of getting investors to back it, and the AGM can be kind of a key moment within that, but how do you get the investors doing things behind the scenes a lot? So I'm going to speak to kind of how ShareAction does it as a model. Obviously, there's a lot of other ways of doing it, but just from our own experience, and share that to see if that's useful. So basically, our kind of starting point whenever we reach out to investors is to begin with a investor briefing, which is a kind of solid research base that lays out the succinct case of why it's relevant to an investor, why they might care. So that summarizes the key risks, whether those are reputational, legal, operational, these sorts of forecasting, and trying as much as possible to get technical and get the numbers in there and get concrete. And also opportunities, so things like living wage is a very positive story to tell about the great things a business can do and improve its absenteeism rates and turnover rates and all these And the really important thing within that is to couple it with clear recommendations. So what are you actually suggesting that an investor do about this topic, and why does it need kind of their attention? So from that, our model is that we have built up kind of a list of investors that are segmented by particular areas of interest. So some are much more into the environmental issues, some are much more into the social issues, some have crossover, and we love those ones. And we distribute research out to those investors, often segmented by what makes sense to each who. And that moment of kind of distributing the research is a really important moment within that process. So we try and couple that with an ask that engages the investor more. So rather than sending it out into the ether, coupling it with an ask for a meeting to discuss this topic and how they might engage the companies in their portfolios, or an invitation to an event. As with anything, the good, clear ask is very helpful. And then we go into sort of kind of simultaneously throughout this process, it's a lot of sort of this standard relationship building. So a lot of our work is really about having coffees with investors, building up that level of kind of trust and respect where they will come to you for your expertise on a particular topic. They'll know that they can talk to you in confidence about what sort of challenges they're having, how they're looking at engaging, and that sort of side of it. And in approaching that, it's really helpful to kind of understand the different limitations and actors, as Phoebe was discussing. So asset managers probably will be structured potentially by the sectors that they'll be managing. So there'll be a particular analyst looking at the retail sector, there'll be a particular analyst looking at oil and gas, and so it's important to keep in mind what their remits are and who will actually be the right person for you to be talking to. But I think we stress a lot that it's kind of a critical friend approach with investors, that it's really important to also be putting the challenge to them, that it's not just kind of if they don't want to do something about it, that's it, that investors do have responsibilities to their beneficiaries, to pension savers, to make sure that they're managing financial risk. And they do have reputations to uphold and to showcase themselves for their clients. So there's definitely lots of room to be encouraging those that are maybe initially dismissive. And then the next step really is, once you have investor interest and you have good context on it, if you want to translate it into action, you really need to make it very, very easy for them, is our main learning. So that means not only being very clear about what you want the companies to be doing if you're focusing on company behavior. So what are the best practices that you'd like to see the company shift towards? What are the bad practices that the company needs to stop doing? And getting specific on who are the good guys and who are the bad guys, how would they segment it? If they're the analyst for the retail sector, how does Tesco compare to Sainsbury's? Having that sort of intel to give them is very helpful. And one of the things we do quite a lot that makes it very kind of easy for an investor to get involved is coordinated investor action. So that means, in investor language, sort of collaborative engagement initiatives. So that can be things like arranging jointly signed letters, or arranging a meeting that you invite the investors to together, or a publicly signed statement from investors at a key moment. And that means that for the investor, it's minimal resource that they need to give in order to be involved, but you get to pool their voices together and have that really powerful message getting across to the company in a very straightforward way. And then from there, ShareAction can sort of keep track of it, do the homework for them, prepare the research, give them this information, report back on the responses that are getting, answer their questions, help them with their own reporting back to the PRI and these sorts, and you become that really valuable source by being that coordinator. So basically, kind of, that's sort of a very simplistic way of looking at it, but I think within it, it's really important to kind of see the distinctions of who you can make what asks to. So like Phoebe was talking about, looking at those different actors in the chain. And some of the kind of key distinctions, I think, are thinking about all of the investors basically as everyone has limited capacities. They're all very busy, so making it very easy for everyone is really important. But there's also different ways that different actors can get involved. So for the smaller investors, they'll have much less capacity probably, but will be very keen to support a number of things. They'll be much more likely to put their names behind something, that sort of thing, but might not be able to go to a meeting with the company themselves, let alone their annual general meeting. Other investors, so we found, especially asset managers, for instance, they have dedicated people that go to engage with companies and their voice raising it with the company directly is probably much more powerful as well. And so acknowledging that they might not sign a letter with a bunch of investors or a public statement, but if you can get them to ask the question when they have their private meeting, that can be much more impactful. So tailoring exactly what you ask to who, but making yourself that helpful resource in the process, I think has been my key learning from ShareAction, really. And I think that's my short summary. I'm getting investors to do things, and then Juliet can talk more specifically on the tool of shareholder resolutions.
Excellent, thanks Lisa. So I'm sure many of you are aware of what a shareholder resolution is, but basically it's the right that a shareholder in a company has to put an agenda item to be voted upon at the annual general meeting, which Phoebe just spoke about. So if you can see the PowerPoint, which sadly you can't, you would see a few agenda items I'm going to talk through. So just to kind of frame my script, I just wanted to flag those now. So to begin with, I'm just going to talk a little bit about the act and processes around filing a shareholder resolution. So looking at some of the legal things that you need to know and also how you can build support. Then I'm going to talk around a little bit about why you might use a shareholder resolution, what some of the pros and cons are. Then I'll move on to talk about how you can mobilise around existing resolutions as a kind of alternative, slightly to the side of filing a new special resolution. And then I'm going to talk about an example of one that we filed at BP and Shell with Client Earth and Aiming for A a couple of years ago. Talk a little bit about how we managed to get that passed and also the kind of environment that we're working in now after the resolution. So to begin with, talking about the act of co-filing a resolution. Now, there's different laws across the world. In the UK, it's much harder to file a resolution than, say, in the US. But in the UK, if you do get your resolution passed, it becomes legally binding, whereas in the US, it's only advisory. So it's very worthwhile getting a lawyer involved and working out what, for your jurisdiction, you're going to have to do to actually get that resolution on the agenda. My experience is filing shareholder resolutions in the UK, and that's dictated by the Companies Act 2006. And there's two different ways that you can get one filed. You either get 5% of the company's investors to support it, or you need to have 100 shareholders representing £100 worth of shares each on average. But that could kind of be mitigated. You could have 99 individual shareholders owning just one share of them, one very large institutional investor, such as a pension fund, as long as the average shareholding is £100. In practice, it's much easier actually to go with the latter strategy. 5% of a large company like BP and Shell is actually enormous. So, for example, with the BP and Shell resolutions, we had over 52 million shares filed at Shell, and that represented less than 1% of the total company. So definitely worth bearing in mind which strategy you'd want to take. To get the resolution passed, you need 75% of the support of the shareholders at the agenda item of the AGM, which is a very high threshold. Normally, unless you get the management to back the resolution, it's very unlikely to get such a level of support. That's been kind of, that precedent's been broken recently across Europe with the successful Aiming for A coalition, who managed to get the management of, say, BP, Shell, a lot of the mining companies, to support their resolutions. So basically, when the companies are talking to their investors, they'll actually encourage them to vote in favour of it. So as a result of that, the Aiming for A resolutions have passed with 99% of the vote. When looking about writing the resolution, which obviously goes on before the actual act of filing, it's very important to consider the wording very carefully. It firstly needs to be written in a way which directs the company to do something. So, for example, disclose information about a controversial project. It also needs to be framed in a way which is consistent with the interests of shareholders. So, for example, highlighting the potential financial risks or opportunities which are associated with a certain sustainability issue. Some tips that we would recommend when drafting a resolution include that it focuses on just one single issue, that it directs the target company to do something which is achievable within a reasonable time frame, that it directs the company to do something which will not prove overly burdensome or costly for the company, and finally to be based on the protection of shareholder value over the long term. It's well worth consulting with investors and other shareholder activist groups beforehand, just to get a sense check of whether the wording of the resolution seems like something that shareholders would actually be able to support if the resolution is successfully passed and successfully filed and goes through for a vote on the ballot. So under the Companies Act 2006 in the UK, if you do manage to file a shareholder resolution, you also have the right to get a supporting statement circulated to all the company's shareholders, which is a really good opportunity for you to kind of sell the reasons why investors should support your resolution. When you're writing that supporting statement, we suggest you focus on convincing investors on why the resolution should be supported, using the financial implications for the companies and its shareholders on the issues that your resolution covers, and to the extent possible, use independent references to support the resolution. So you've been successful in filing a resolution, which is great, but you can't take your foot off the accelerator now, because this is actually when the hard work really begins. You'll need a really good outreach and media strategy to gain support for your resolution, because as I say, 75% of the vote is a very high hurdle to get. So some groups which are particularly important to reach out to, kind of going back to the whole why it's important to know the investment chain, just so you know who to target. Asset managers are generally responsible for voting the vast majority of shares. It's quite hard to get meetings with asset managers, but you get much more bang for your buck if you manage to get one of these guys to support your resolution, because they can own up to, say, 5% of the total voting rights, whereas a small pension fund will have about 0.01%. So it's much more kind of tactical to go after the big guys rather than trying to get lots and lots of small investors. That being said, the small investors are probably more likely to be supportive of your agenda, so it is worth kind of going after socially responsible investors, charitable foundations and faith-based investors to try and get them to lobby their asset managers on your behalf. It's also worth doing a little bit of research into investors which have previously spoken out in favour of your topic. So maybe you can do some research and see if anyone's spoken about it at an AGM or supported a collaborative initiative at a company about the topic that you're doing, or whether they've published any research recently, just to show that they might be supportive. Another group which is important to engage with is proxy advisory services, such as ISS and Glass Lewis. These guys are in charge of recommending to investors how to vote on resolution items. So if you can get one of the proxy advisors to say, yes, this is actually a really good resolution, we think you should vote in favour of it, you're likely to get a much higher percentage of the vote. And this was seen successfully with As You Sow last year. They filed a resolution about antibiotic resilience at McDonald's, and Glass Lewis actually supported it, and as a result they got 20% of the vote, which was kind of unprecedented, and often these resolutions get about 3% of the vote. So that was a really smart move on their behalf. So next I wanted to talk about why use a resolution. As you've probably gathered, it's actually very difficult to get one filed, so it's definitely worth thinking whether there are other strategies of getting your issue onto the board level. So, for example, you might want to just have some discussions with investors and see whether they're supportive of the aim of your resolution before taking it all the way through. But obviously, if you are successful in getting it filed, you do have the opportunity to actually change the behaviour of the company. And even if it doesn't actually get passed at the ballot of the AGM, sometimes it can still result in substantive changes. This was seen in 2009 when we filed shareholder resolutions with BP and Shell. These weren't actually successful, but they're about tar fans. But as a result of the resolution kind of pushing investors to talk to the companies about it, the companies did actually end up disclosing more information which they didn't initially want to do. So that was really good. So another issue I wanted to look about was mobilising support around existing resolutions, because it is difficult to file new resolutions, and there are every year lots of other resolutions that you could support and kind of campaign around, which is another really good way of using AGMs and shareholder activism. So you could support a resolution filed by someone else. In the US, it's much easier to file a resolution than in Europe, and indeed hundreds get filed every year by socially responsible investors, church-based investors and groups like As You Sow, who are kind of shareholder activist groups like ShareAction. So you could run a campaign supporting one of these, and indeed ShareAction supported the As You Sow McDonald's resolution last year, and we worked with AODP and some of us to support the resolutions which were filed at Exxon and Chevron about 2-degree planning. Another option is highlighting an existing agenda item, because on the ballots of the AGM every year, it's not just special resolutions filed by shareholders, but there are a load of other issues that investors can vote on just as a matter of routine. And these are things like political lobbying expenditure, appointing directors, appointing auditors, executive pay, and other topics as well. So you could challenge investors to vote down one of these things if it's an issue you care about, such as political expenditures. That can be quite controversial if a company's been spending lots of money to lobby against environmental legislation or something. And indeed, ShareAction is looking to use the binding vote that BP and Shell face on their remuneration policies at next year's AGM to kind of draw attention to the fact that currently the executives of BP and Shell are incentivised and rewarded for driving the companies along a high carbon pathway, and they have strategic objectives premised on very dangerous levels of temperature rise. So we're going to be making the case to investors that they must demand remuneration policies that are actually supportive and incentivise the low carbon transition, and that they should vote down the policies which aren't aligned with the ambition of the Paris Treaty. So that's just an example of how you don't actually have to file a new resolution to kind of use these shareholder activist techniques to really raise attention and push a company to think about the issue that you're campaigning on. I just wanted to wrap up with the example of BP and Shell, because this is an example of a resolution which did actually get passed. So actually, I joined ShareAction just in time to help with the shareholder resolution process around this. So I was doing lots of photocopying and filling in spreadsheets around who'd filled in their paperwork and who hadn't. And we worked with the Aiming for A coalition, which is run by CCLA, which is a church-based investment management over here in the UK. And also Rathbone Green Bank, who are another socially responsible investor. And we also worked with environmental lawyers, Client Earth, to file this resolution. The resolution itself called for greater disclosure on a few issues which are going to help investors assess how exposed the companies are to climate risks. So this is things like how resilient they would be under different climate scenarios, more information about their political interventions, and information about how their KPIs and executive remuneration is being reimagined in light of the necessary changes that the companies will need to go to make sure that their business models are resilient under low carbon scenarios. The resolutions were co-filed by 150 shareholders, so actually going beyond what was kind of needed as a legal minimum. And this was a mixture of individual co-filers holding just one share. In fact, I think me and Lisa both filed that resolution with our one share. And there was also 53 institutional investors from across the world, including pension funds, faith investors, and charitable foundations. So this gave the resolution much more kind of substantive backing and made the companies take it more seriously than if it was just individual co-filers supporting it. Despite all the hard work that went on behind the scenes, it was still a big surprise in January when both companies came out in support of the resolution. So when they circulated the resolution and supporting statement to their shareholders, they recommended that these should be supported. And as a result of that, they were passed at the AGMs with 99% of the support of shareholders. We're not claiming this to be a big climate victory. Surely there's still a big hurdle to actually making sure that the disclosures tell us the things that we want to see, so that the companies are actually adopting a low carbon business model, which their first year of disclosures didn't really show. But I think it's worth bearing this in mind that this is part of a long-term strategy and a game to push the oil giants to wind down their hydrocarbon operations, which is never going to be an easy victory. And it's worth recognising that these resolutions did send a signal from the investor community that they are actually concerned about the risks associated with climate change. So yeah, watch this space, because we won't be taking the pressure off BP and Shell just because we got the resolution passed. And that's, sorry I rambled on a little bit there, but still time for questions.
No, that was great. Yeah, as Juliette said, definitely keen to hear your questions now, your comments on that.
Hello. This is Jan speaking from WWF European Policy Office.
Oh, yeah.
Thanks a lot for this information and very hands-on tips on how to work with investors on shareholder engagement. I have a bit more general question. We at WWF are rolling out a program with like national offices of WWF in 10 countries, more than 10 countries, where we target the biggest asset owners in Europe on their climate change policies and how they integrate climate change in their investment practices. And in the context of that project, we are working on recommendations for asset owners on climate change, and part of it is how investors can engage with asset owners in a meaningful way, and really like try to define some criteria for what is meaningful engagement or stewardship or whatever you want to call it, because we understand that asset owners often have a few thousand companies in their portfolio, and it's basically impossible to really engage with all of these companies in a meaningful way. So do you know of any investors that have public engagement policies that, for instance, publish how many companies they engage and how? Because, you know, sometimes they just send a letter and then there is no follow-up, and that, according to us, would not really have a huge impact in itself. So you would need like an active engagement, maybe with a limited number of companies to actually have an impact on what a company is doing. So the question would basically be, have you thought about what would be meaningful engagement, and do you have concrete examples of investors that have thought about this and have published policies, or have you done some studies about what investors actually do concretely on the ground to engage meaningfully with companies? Thank you.
Thanks, that's a really good question. I'm sure Lisa's got something to say as well, but I'll just kick off with a few thoughts. It's a really good point. Obviously, in asset owners who have shares in hundreds, possibly even thousands of companies just don't have the capacity to do that kind of really proactive stewardship which we promote. And we kind of accept that there are limitations, and sometimes investors say, okay, we're just going to prioritize these issues, these sectors this year because they're kind of the ones where we see the most risk or there's the biggest environmental impact that they're having. And I think, you know, just from a pragmatic ground, you can kind of support where they're coming from that. But all the same, it is important that they are voting their shares, for example, and it's initiatives such as one set up through the IIGCC, which is the European network for investors who want to focus on climate change, and that just means it makes engagement a little bit easier. In terms of best practice with specific sectors, again, the IIGCC has done some investor expectations on what kind of good engagement with different sectors, very specifically related to climate change, looks like, and I'm sure Phoebe can send you over the links to the website there if you'd like to see those in a bit more detail. I think the fossil fuel companies, what good engagement there, that's quite a you know, controversial one just because of the divestment debates that are going on. So ShareAction is currently trying to kind of put together a slightly more punchy what good engagement with the fossil fuel sector looks like document, and I think it's worth, you know, definitely holding investors to account who say, oh, we can't divest, but we engage, kind of saying, well, what are you doing to engage? What are your timelines? What are your objectives? And putting them a bit more on the spot rather than just having a blanket answer of, you know, engagement. Lisa, did you want to add?
Just two thoughts really. One resource that might be helpful is a lot of the investors that are sort of doing the kind of better on the engagement responsible investment front will publish their evaluation by the Principles for Responsible Investment. So not all of them do, it's not required, but quite a few will, and that might give you some insights into how some of the leading ones are designing their policies to manage that in the best possible way. So it could be a useful benchmark there. And another, I think, important thing to highlight with asset owners is what mandate are they giving to their asset managers in contracts and these things. So it might be the case that they really, you know, it's a bunch of trustees who don't actually work for the pension fund and one accountant. And so in that case, what are they actually requiring their asset managers to do is a really important question to evaluate, I think.
Excellent. Any more questions or follow-up questions?
Lars from Denmark. Preventable Surprises is doing a campaign around the utilities sector this upcoming AGM season. Is that would be one thing to carry into the WWF project, which I'm a bit in contact with the Danish bit of that, and we have in our campaign been working quite, I'm from another NGO, been working quite a bit with asset owners, so what you can say to them I would know a bit about. But will Share Action coordinate or work with Preventable Surprises on that utility oriented campaign, or and how would this network might that fit into that?
Yeah, absolutely. We work a lot with Preventable Surprises, and I think IIGCC earlier in the year put out some guidelines around what good engagement with the utility sector would look like. So kind of pushing that forward through techniques of shareholder activism, and obviously we can all use our connections. So if you know an investor who might be able to, say, raise a question with a company or file a resolution with a company, I think that's a really good way we can kind of share our networks and help support each other's initiatives. You know, if people have shares, they can use them to go to the AGM on behalf of someone else. I think there's lots of things that we can do to support that initiative.
Hi. Hi, it's me, Sanju from Change Partnership. I hope you can hear me okay.
Yeah, we can.
Okay, perfect. I'm looking a little bit, this is fascinating, thank you for doing this one. I'm looking a little bit in terms of the regulation of the asset manager industry, as it were. There was a discussion a couple of years ago with a Financial Services Stability Board looking at some form of regulation and looking at the kind of systemic risk aspects and kind of regulating the industry up to the point where they're, I forget what they're called, but it's some form of systemic risk to the financial sector category. Is that something you're looking at as well? Is there a general interest amongst the network to look at this? Because I mean, our thinking is that if we can, you know, add more and more liabilities or concerns, more liabilities for asset managers themselves, then it kind of indirectly will filter across their entire portfolio.
Gosh, I don't think it's a topic that anyone among us three of us dived into much detail on. But
yeah, I know it's a topic for Share Action in terms of looking at fees and improving transparency around fees from asset managers. But I think we need to get you in touch with the relevant contact at Share Action there. But other people have thoughts on this who are on the call, please do chip in.
Yeah.
Seems not. Yeah.
No, the last thing I heard that there's a heavy lobbying going on from fossil fuel companies on these reportings. So they're trying to open up to allow for stress testing of different scenarios, including a 3-degree scenario. They did report preliminary in April, can find that, and will report just after New Year's again. from this board. I suppose it will go into the regulation in the D20 countries.
Okay. Yeah, sorry, Sanjeev, we need to follow up with you on that, if that's okay. If there's other questions, please do.
Yeah. Mark van Baal.
Hi, Mark.
Hi, good afternoon, calling in from Amsterdam. I represent Follow This. We filed a shareholder resolution in Shell last year using the, I must say, excellent guide of Share Action. You did all the groundwork for us, and we just had to follow your guide. We submitted a green shareholder resolution, which finally got 3% of the votes. That's not much, but still 2.5 billion. And a lot of shareholders expressed their support for the spirit of the resolution, but couldn't agree with the letter. So now we're talking to large institutional investors to get their input. And since we are with a lot of nationalities here, I hit Belgium, I think, Scandinavians, German. We're reaching out to as much asset owners as possible, and maybe a few of you could give us advice which asset owners in your country, and I think we can do that offline. I will send you. I've written the question, so you will see it with my email. But I would be very much interested from people who know the German market, who know the Belgian markets, etc. Which are the asset owners who are really receptive for this kind of talks? In the Netherlands, I really encounter some asset owners who are very receptive and they're really thinking with us, and the other ones, to put it short, we have a meeting with them and they're just going to tell me how the oil and gas market has worked for the last 100 years, and telling me that that's not going to change. So for everybody listening, if you know asset owners in your country, which you say, yes, these are the ones you should talk to, please let me know.
Thanks, Mark. I'd love to catch up about your latest work, but yeah, I'll definitely take that one offline. Thanks for.
Yeah, and definitely a good call for action to those who have got links in the German or Belgian market.
Yeah, and from you, Frederic, I'm keen to hear what in the UK are the most receptive ones.
Yeah, I think as Juliette said, she's happy to continue that, like for email. I think that might be, if I'm right, that might be a little too detailed.
No, it's far too detailed. I just want to encourage everybody just to reach out to us and let us know who in your country. And again, thanks a lot for your guides, because without that guide we couldn't have made it within a year.
Oh, great. Good to hear that Juliette's work's been put to good use. I know we're at 4 o'clock, but because we started a bit later, so if you need to leave, obviously do, but if you've got some more questions, then please ask them.
Yeah, hi, this is Marcus from Ethical Shareholders Germany. Thanks a lot, you guys, for sharing all this information and insight. It's very useful and helpful. Ethical Shareholders Germany are part of the Plow Back the Fruits campaign. That deals with the Americana massacre, which happened in 2012. I don't know if you are familiar with this. The company is Lonmin in South Africa, a South African British company, and one of the world's biggest producers of platinum. And we plan to participate in the annual general meeting of Lonmin in 2017, next year in January. And of course, we don't want to go there without a very good and solid preparation. And we are experienced in German AGMs and in some other AGMs, but not so much familiar with British AGMs. And we just know that the conditions are different. You only can ask short questions and not give speeches, which we are used to.
Yeah.
So can any of you maybe share some information, like in the BP annual general meeting? I don't know, was it in the Netherlands or in England, and how the conditions were?
Sure, yeah. I mean, we've got a detailed guide on AGM activism, which we'll send over afterwards. But just as I think, a rough overview, you just need that one share to get into the meeting, and sometimes you need to register the question in advance. So that's worth being aware of if you're coming to a UK AGM. They do differ a lot in size, so you can go to some which are very small and you might be the only person asking a question, whereas others like the BP AGM are very enormous and you might be waiting a couple of hours before your chance comes. I don't know if there's anything else.
Yeah, but just to highlight or underline, definitely happy to talk this through with you. And do you know whether this is a FTSE 100 company that they're listed on the?
Are you asking what kind of company Lonmin is? Did I get this right?
How are they listed? Do you know? Are they in the
no, I think they don't belong to the biggest companies or 100 companies. They're big in platinum and other commodities, but not one of the biggest.
Okay, but yeah, we can definitely, help you find or resource a share from that company and help you talk through what the procedures are. Definitely very happy to just follow up with us on that. Good.
Yeah, thanks.
And yeah, I'm sure you're linked up with the London Mining Network as well. There might be.
Yes.
Yeah, so it might be worth coordinating with them as well.
Yes. Okay. Thanks.
Thanks, Marcos. Have any other questions, maybe on the social side of things? If not, I'm happy to wrap this up. Thanks so much for attending. My sincere apologies about the technical hiccups at the beginning. I hope it was still okay to follow the session. We'll share the presentation and a few bits and bobs, like the other information that we said we'd share. And yeah, if you'd like to participate in other Skillshare, hopefully running a little more smoothly technically, do let me know. I'll share some information how you can stay up to date there as well. But, thanks very much.
Thank you very much, Frederick, and all the others. Bye-bye. Have a nice evening.
You too. Thank you.
Thank you.
Bye.
Bye.
Thank you. Bye-bye.